Dear students and viewers, welcome back to Curious Commerce. Today, we are going to discuss a very important and fundamental topic sources of finance in the primary sector of India. This topic is not only important for commerce students but also for competitive exams, economic learners, and general awareness. The primary sector in the foundation of our economy, and without finance, the sector cannot survive or grow. So, let us begin step by step. The Indian economy is broadly divided into three sectors. There are primary, secondary, and tertiary sector. Among these, the primary sector comes first because it provides raw materials to all other sectors. If the primary sector stops functioning, industries will not get raw materials and services will also collapse. Therefore, understanding how money flows into the primary sector is very important. The primary sector refers to economic activities that directly use natural resources. These activities involve extraction and production of raw materials from nature. For example, agriculture, fishing, forestry, mining. This sector is called the foundation of the economy because every other sector depends on it. If you take the real life example, if farmers do not grow crops, food industries cannot operate. If the food industry cannot operate, what about the food packaged foods in the market? Automatically, food shortage will be takes place. Like that, if the primary sector affects automatically, it affects to secondary and tertiary sector. Primary sector includes all economic activities that involve extraction and production of natural resources. Once again, I will repeat, primary sector includes all economic activities that involve extraction and production of natural resources. The key word here is direct use of nature. No processing, no manufacturing, only extraction and basic production. The major components of primary sector. The primary sector consists of several important components. They are agriculture, animal husbandry, fisheries, forestry, and mining and quarrying. Each component has different financial needs, but the basic objective is the same, to produce raw materials. Now we will discuss one by one the agriculture. Agriculture is the backbone of the Indian economy. Even today, A large percentage of India's population depends on agriculture for livelihood. It is highly dependent on monsoon, very labor intensive, seasonal in nature. For example, the paddy cultivation, wheat farming, sugarcane farming, because income is seasonal, farmers need finance before income is generated. Once again, I will repeat, farmers need finance before income is generated. So, now the big question is, why does the primary sector needs finance or the fund? Funds are required for purchasing seeds, fertilizers, and pesticides, buying the tools, tractors, and equipment for the irrigation facilities like bore wells and canals and pipe system, working capital for seasonal activities, and the risk management in case of crop failure. Unlike salaried income, farmers spend money first and earn income later. Now we will discuss about the classification of funding sources. Sources of finance in the primary sector can be classified into internal sources, institutional sources, non institutional sources, government support, modern and alternative sources of finance. Let us understand each one in detail. Internal sources refers to funds generated within the farming family or activity itself. For example, personal saving of the farmer, family contributions, sale of previous produce or the previous harvest, and retained surplus. These sources are cheap, easy to access, but limited in amount. Small farmers mostly depend on internal sources only. Institutional sources of finance. Institutional sources are organized financial institutions regulated by the government. This includes commercial banks, cooperative banks, regional rural banks, and NABARD. Institutional finance is safe, regulated, and relatively cheaper. Now we will discuss one by one. Commercial banks provide crop loans for the farmers, term loans, and Kisan credit card or Kisan credit loans. Crop loans are short term and used for seasonal needs. Term loans are long term and used for equipment and infrastructure. The Kisan credit card scheme provides easy credit access, flexible withdrawal, lower interest rates, but you borrow the money through the Kisan credit card. It works like an ATM card for farmers. This scheme has greatly reduced farmers' dependence on moneylenders. Cooperative banks and societies work on the principle of mutual help. Primary agricultural credit societies operate at village level. They understand local needs and provide credit quickly, especially to small farmers. Regional Rural Bank and NABARD. Regional Rural Bank focuses on rural development. NABARD acts as the apex institution for rural credit. It does not lend directly to farmers but supports banks and cooperative s- societies. The government plays a major role in supporting the primary sector. The direct support for the farmers or for the primary sector, fertilizer subsidies, power subsidies, and minimum support price for the crops. MSP, minimum support price, protects farmers from price fluctuations. Indirect support from the government includes PM Kisan income support, crop insurance schemes, and irrigation projects. These measures reduce financial risk in the primary sector. Non-institutional sources of finance in primary sector. Non-institutional sources include moneylenders, traders, commission agents, and landlords. Through easily available, these sources charge very high interest and often exploit farmers. The last option is the modern and alternative funding sources for the agriculture, agri startup funding, venture capital, farmer produce organization, shortly called as an FPOs, digital lending platforms. These are emerging sources and will shape the future of agriculture finance. The next major area in primary sector is animal husbandry. Animal husbandry includes dairy farming, poultry farming, sheep and goat farming. Cooperative like Amul and KMF follow a member owned financial model. Next one is the fisheries. Fisheries include inland and marine fishing. Funds come from the government schemes, cooperative societies, and bank finance. This sector supports coastal and rural employment. The next major primary sector category is forestry. Forestry includes timber, medicinal plants, bamboo industry majorly. For the forestry, major fund sources from the government forest department and public sector funding. mining and quarrying. Mining is capital intensive. For example, Coal India Limited. Funds from government support, internal profits, bonds and borrowings. Role of primary sector in economy. The primary sector generates employment, supplies raw materials to the secondary sector, promote rural development, earns foreign exchange through export. But what about the contribution towards the GDP? Through its GDP share is declining, the primary sector remains the largest employer in India. But the primary sector faces certain problems. The major problems include seasonal unemployment, because the agriculture is or the primary sector is majorly depend on the seasonal, and the low income dependence on nature means that the natural calamities, credit availability issues. But to minimize these problems, the government initiatives are appreciable. The key initiatives from the government include MSP, minimum support price, PM Fasal Bima Yojana, Prime Minister Fasal Bima Yojana, rural credit expansion through NABARD. Modernization of primary sector. Modernization includes mechanization in primary sector and irrigation, digital farming, use of technology and data. Comparison with other sectors. So the major parameters we consider is nature and risk. In the case of the primary sector, where extraction from the nature, but the risk level is very high. But in secondary sector, we are import, we are borrow or we are taken the raw material from the primary sector for the manufacturing activity. That's why the risk level is minimizes compared with the primary sector. That's why the risk level is medium or the moderate level of the risk. But in the tertiary sector, what we call as in the service, the investment level and climatic changes, natural disasters are very less. That's why the risk factor is also very low. For understand the scenarios of the cooperative society, I will suggest one case study for the self study purpose. Amul is a farmer owned cooperative model or the KMF, Karnataka Milk Federation. It shows how self finance is very important and how the model is financial models are created, and what about the collective ownership and professional management, how the professional management will take place in that cooperative model, how it can create the sustainable income for the farmers. But after all these things, we should know about what are the future of primary sector. The future of primary sector lies in organic farming, agri exports, value addition, agri startups. That's not only related to only agri, but also for the overall the primary sector. Finance will play a key role in this transformation from traditional primary sector to future primary sector. To conclude, the primary sector and the foundation of Indian economy requires adequate finance, institutional support, and modern technology. Balanced growth of the economy is impossible without a strong primary sector. Thank you for watching Curious Commerce. For daily updates, follow our WhatsApp channel, Curious Commerce Financial Management Hub. If you found this video useful, like, share, and subscribe. See you in the next lecture. Thank you.